Hello everyone, in this video we're going to talk about the potential risks of investing in Tesla stock today. Tesla stock has been a star of the pandemic. Its share price went up 1,300% from beginning of 2020 all the way to November of 2021. And since then, the stock has been on a downward trend, and it's currently down about 65% from the peak. Tesla is a member of the Magnificent Seven stocks, which are the 7 largest tech stocks in US. This chart below shows the Magnificent 7 stocks year-to-end performance in dark blue, and in light blue color we can see its current price distance from the 2024 peak, right? And as we can see, Tesla is the worst performer. It's down 41% year to date, and it's also 41% away from this year's peak, which means the first trading day of this year is the peak of Tesla for 2024. Tesla will be reporting earnings tomorrow, which is Tuesday, April 23rd. It's expected to report first year-over-year revenue drop in 4 years. And Tesla recently announced that it's slashing headcounts by more than 10% globally. That's about 14,000 employees. And the reasoning given was that was to reduce cost. And for Tesla as a company, what's the current direction it's going for? It appears that right now the direction of the company is to push for Robotaxi, which is a self-driving car that can be hired on a per journey basis by a passenger, meaning it's a driverless car. The car drives itself without a human driver. On April 5th, Elon Musk on its X account posted that Tesla Robotaxi will be unveiled on August 8th. Of course, to be able to achieve Robotaxi, Tesla's full self-driving software, or FSD, needs to be able to achieve level 4 autonomy set out by Society of Automotive Engineers, and level 4 is over here. And the system is currently at level 2 only, meaning that the human driver needs to be ready to take full control when the computer is doing assistant driving. So even though the software is called full self-driving software, it is not capable of doing full self-driving. And speaking of FSD software, I want to talk about the full self-driving competition that Tesla have. Tesla's competitors in the autonomous driving space, it's very fierce competition. We know Alphabet Waymo have its self-driving software that's able to achieve level 4 autonomy. There's Chinese competitors like Baidu or AutoX. They also have systems that can achieve level 4 autonomy. So this car is a Baidu self-driving system, but the problem of these Tesla competitors that have achieved a level 4 is that their system not only rely on cameras, they also rely on LiDAR, right? This piece of equipment over here. And on top of LiDAR, their onboard controlling system also need to have a detailed mapping of the environment. That's why you see Waymo can only deploy in certain cities, because their system needs to have the map of that city. For example, how many lanes in each road and where exactly the intersections are in that map. So they need that map to achieve level 4 autonomy, autonomous driving. So their system, and on top of that, their system is very complex. They need a lot of sensors. For example, Waymo might require 50 to 60 sensors on each car, but Tesla probably just about 4 or 5 sensors can achieve their autonomous driving. Okay, so in the approach of autonomous driving system, I think Tesla have a lot of advantage over their competitors' system if and only if Tesla is able to make their software work. Right? So currently it's not considered working. Level 2 is not enough for Robotaxi. They need to make FSD Level 4. So now the million-dollar question is, when will FSD achieve Level 4 autonomous driving? Elon Musk, since 2014, has been promising this almost yearly, that Tesla will achieve full self-driving capabilities either end of this year or by next year or blah, blah, blah. This pattern of predictions has continued for nearly a decade. And right now we are in April 2024. Their system's still not able to achieve full self-driving. So the latest prediction from Elon Musk regarding this was made in 2023, where he stated at the World AI conference in Shanghai that he expected Tesla to reach full self-driving capabilities, potentially at level 4 or 5 within that same year, which is 2023. And again, we're at April 2024, and they are still not there yet. On April 5th, there is a very interesting article released by Reuters that's saying people with insider information said that Tesla is scrapping its low-cost car plan. So they used to say there were rumors about Tesla making a $25,000 model, which is $10,000 cheaper than the Model 3. That's priced at $35,000 currently. This news was denied by Elon Musk, but it still made a dent on the share price of Tesla, because many investors has been bullish on Tesla due to this exact promise of making a affordable model. And it's seen as a pivotal move to democratize EV and significantly expand Tesla's customer base, right? Especially open up the middle class sector of its market, to open this product up to a mass market. And this is actually potentially viewed as a significant growth driver, especially when a stock is at the current market cap, giant, huge $1 trillion stock. It needs drivers. It needs revenue growth drivers. And speaking about creating affordable EV models, it sparks another conversation regarding price competition of Tesla against Chinese EV companies. Right now, I'm going to use BYD as an example. BYD is the largest Chinese EV company in China. In the final quarter of 2023, BYD surpassed Tesla in terms of the number of fully electric vehicles sold. But BYD's success is significantly bolstered by the strong local support in China. China is the largest EV market in the world, right? The Chinese market, it makes sense that Chinese market tend to favor local manufacturers, right? Due to either national pride or due to governmental support and policies and incentives. BYD has also actively expanded into the European market. It's been selling their products in various European countries. They also have dealerships in places like Germany, Norway, and Sweden. China has also a natural advantage over Tesla or over America, because China has been a global manufacturing hub for many, many years, which give Chinese car companies or manufacturers a significant advantage in terms of scaling up productions and reducing manufacturing costs, right? So making Tesla even harder to compete prices on their products against the Chinese competitors. And let's talk about lithium batteries, which is the power source of these EVs. Tesla has been boasting about advantages of scaling up battery productions to reduce costs of manufacturing. it's a strategy known as economies of scale, right? The more you produce something, the cheaper you can produce it for. However, the competitive landscape is bringing Tesla a lot of challenges from the Chinese manufacturers, such as CATL, right? Currently the largest lithium battery company, and BYD itself, right? BYD, they not only make EVs, they also make batteries, lithium batteries. And those batteries got the same benefit from the significant domestic demand from China and extensive governmental support. CATL is currently the largest lithium battery company in the world. It's responsible for 38.4% of global EV battery market in 2024, up from 34% in 2022. So as a conclusion, to summarize this video, I just want to remind you it's not a financial advice. I'm not telling you to buy or sell or short or whatever Tesla stock, but I just want to give you a list of risks I think that are currently associated with Tesla stocks. And they are the challenges, including with their FSD software, the challenges with Elon Musk constantly missing the promises, and potential shift away from mass market, right? The cancellation of the $25,000 vehicle model, and the fierce competition coming from the Chinese EV and battery manufacturers. Please subscribe to my channel for more. Thank you very much.